Good morning. I'm Nathan Urquhart, Global Head of Investor Relations. You've heard from Q and Kurt on our plans to accelerate growth, and from Pete, Sandra, Mark, and Rilke on our strong investment platforms in global private equity, credit, and solutions. I'm excited to talk to you today about our confidence in raising $130 billion by 2024. We believe Carlyle is well positioned to continue our strong fundraising track record. We are a market leader in a growing and consolidating asset class. We have deep strategic relationships with the largest limited partners in the world. And finally, we have fundraising momentum going into the next cycle of our scalable flagship products. Let's start by talking about our asset class. Since the global financial crisis, private markets have experienced rapid growth. Private equity, private debt, and real assets fundraising has achieved record highs. And while we've seen fundraising increase, the number of funds raised has actually decreased, suggesting the industry is consolidating. And that consolidation is exactly what we're seeing in the market. Our limited partners are concentrating their investments with the largest general partners like Carlyle. These are trusted managers who have demonstrated long-term, consistent performance and the ability to invest in scale. These partnerships have been built over decades. Fundraising data confirms this consolidation is happening. In 2014, the largest 20 funds represented around 30% of capital raised. That number increased to 45% in 2019, and we expect this trend to continue as the largest managers take more and more market share. Finally, we expect our industry to continue to grow. Public pension plans, which represent our largest investor segment, periodically review their strategic asset allocation. This strategic asset allocation sets where they will invest their capital over the next 5 to 10 years, so it's a leading indicator of where the growth will be. Now, in 2010, when going through their strategic asset allocation plan, public pensions planned to invest 13% of their pensions in our asset classes. In 2020, that number increased to 23%. And again, this is a leading indicator of where the capital will be invested. Importantly, our asset classes experienced significant growth in planned investments. Private equity and real estate were up 30%. Infrastructure was up 60%. And private debt is really interesting. It was not a separate allocation in the 2010 study, but by 2020, it was 2%. And during that time, the private debt market increased by 168% to almost $850 billion. Next, I'd like to discuss our deep strategic relationships with the largest limited partners in the world. Carlyle has a strong track record of capital raising. In 2020, our assets under management hit $246 billion. And we've increased the number of investors we work with every year to over 2,600 investors. We have a track record of raising capital around the world from many of the highest quality and largest institutions and high net worth platforms. Since inception, we've raised over $300 billion from over 2,600 LPs in over 90 countries. And we now work with 65 of the top 100 limited partners in the world. Our strong relationships span investor types, with public pension plans, sovereign wealth funds, and high net worth investors representing our largest investors and a key area of focus of growth for us. In the past 8 years, we have seen impressive growth across our largest investors by type. We increased commitments from public pension plans by 5 times over this period, and we now work with public pension plans in 40 states. We raised over $35 billion from sovereign wealth funds over this period, representing a 3 times growth rate, and we've developed strong partnerships with the largest global sovereign wealth funds. Finally, we have focused on providing individual investors with access to our products and increased commitments from high net worth investors by over 2.5 times. Now, earlier we talked about our strong global relationships and the consolidation in the industry. We have been successful at building strong solutions-oriented partnerships with our limited partners, and these partnerships are across multiple investment strategies at Carlyle. In 2012, about 25% of our commitments to our funds were from investors who had invested in 4 or more investment strategies. By 2020, we've increased that number to 60%. This trend is even more pronounced when looking at our top investors by commitments, who have strong partnerships across our firm. Over 80% of commitments to our funds from these top 30 investors are from investors who have invested in 4 or more strategies. We do more than just sell funds to our investors. We develop long-term, solutions-oriented partnerships that span multiple strategies at the firm. We have a dedicated global investor relations team of over 100 people with deep global relationships and a breadth of product and asset class expertise. Our team includes 50 relationship managers who are located in local markets across North and South America, Europe, the Middle East, and Asia. These relationship managers are led by 8 senior relationship managers who work with our largest clients and partners. And these senior relationship managers have been with the firm for 12 years on average. Our 40 product specialists provide deep expertise across our products and support the entire fund and LP cycle. This team delivers the firm to our clients and develops strong partnerships with the largest limited partners in the world. Now, in 2020, the world changed and we pivoted and embraced this new virtual way of engaging with our investors. In fact, we believe we talked to our investors more than ever in 2020. First, we provided transparency on their investments, as well as Carlyle's global insights and perspective during this volatile and uncertain time. We also had our first virtual investor conference with over 1,600 of our limited partners attending. And we were very successful at building even stronger partnerships with our limited partners during 2020, raising over $27 billion. Looking forward, we're excited. We believe this new way of working with our limited partners is just getting started. Q talked earlier today about institutionalizing the firm and operating more efficiently. We believe this virtual way of engaging with our limited partners will allow us and our limited partners to work together more efficiently and ultimately raise funds more efficiently. Finally, we're excited about our fundraising momentum going into the next cycle of scalable flagship products. We have a track record of fundraising success. As Kurt mentioned earlier today, in the last cycle, we targeted $100 billion, and we exceeded that number. Going into this cycle, we have taken a strategic approach to our product suite, which is designed to offer solutions across global private equity, global credit, and investment solutions. Our products are diversified across geography, strategy, and risk-return profile. In global private equity, our flagship private equity and real estate funds will be coming back to the market. These are large and scalable products with strong investment performance and long-standing relationships with our limited partners. In global credit, we have developed a differentiated product offering. We have taken a platform approach to delivering solutions across liquid credit, illiquid credit, and real assets credit. And in investment solutions, our flagship funds just completed a fundraising cycle. We'll focus on customized solutions for large institutions across primaries, secondaries, and co-invests. Taking a step back, we're very excited about this cycle and accelerating our growth at Carlyle. Our industry continues to grow and it's consolidating as the largest managers take more and more market share. We have strong and growing partnerships with the largest limited partners in the world, and our flagship scalable products are coming back to market. With this backdrop, we are confident that we will achieve our $130 billion fundraising target.